Yo, what's cracking YouTube? It's your boy Professor Crypto. Got another hot crypto class for you guys today. This one's on fire. You guys already know anything we bring on the channel, it's got the heat, got the potential, and it definitely should be watched. This one is no different, guys. Without further ado, let's jump right into it. Class is now in session. Eureka! This one is called CONG CAP.
Damn, son, where'd you find this?
Essentially, guys, CONG CAP is short for the Conglomerate Capital. To describe this project, TCC for short is a Web3 BEP-20 blockchain-based investment and funding platform governed by a decentralized autonomous organization, as you guys know, short for DAO, from which disruptive startups as well as SME businesses will raise capital, where investors will be able to access venture capital and private equity outstanding opportunities through the CONG token itself. Now, guys, they go on to explain that as the Conglomerate Capital and its token CONG are completely different from what is currently available in the market, they do have some resources to help us understand their business model and project itself a little bit better. Let's check out this video.
Hi everyone, I'm Matt. Nice to meet you. Are you tired of investing in projects that are not real or have lack of confiability? Or are you just speculating with your capital that you worked hard to earn? Now it's time to invest in a project will shape people like you invest their money. Welcome to the Conglomerate Capital. We are addressing many problems that the investment industry faces from the investors and also the company's perspectives. Let's take a look at them. First, assets, private equity, and venture capital funds environments are very restricted, like rich-oriented exclusive leisure clubs. Retail investors are very unlikely to access private market outstanding opportunities. Second, you need to have a deep technical expertise to know how to analyze an investment opportunity. People dream about making money easily, but there is no shortcut. Third, investors, entrepreneurs, and companies are completely disaligned, as bankers, advisors, and web funding platforms are just concerned about their fees. 4. Small and medium companies struggle to raise capital as their balance sheet and track record do not permit that. They also do not have access to a wide range of retail and accredited investors for funding. And lastly, 5. Tangle of regulatory laws and bureaucracy constrained retail investors to invest in private companies and private companies to raise. What about the solution for these problems? After months of hard work, we want to present you a Web3 and Ethereum blockchain-based funding platform governed by a decentralized autonomous organization, DAO, from which disruptive startups as well as SME businesses will raise capital, where the platform's team, entrepreneurs, and investors have interests completely aligned by becoming holders of the platform's token.
Solid intro video by Matt here, guys. Let's check out how TCC works by Nina.
Hello, dear friend. Thanks for your interest in learning about us. I'm Nana from the Conglomerate Capital's team. So let's get into how the platform will work and generate value for the ecosystem stakeholders and differentiate itself from other players. To have a better overview and understanding of the platform's ecosystem, one of the best ways is to analyze its capital flow structure. Let's put the Conglomerate Capital platform in the center of the slide, and just to remember, is where companies will raise capital through. It is also important to mention that we are a decentralized autonomous organization, so everything is decided on a consensus voting basis. You can take a look at the video regarding token governance for further knowledge on this matter. So after a company applies for funding and holders vote in favor, this investment opportunity opens a campaign in the platform. The investors, either retail or accredited ones, venture capital or private equity funds, can allocate their capital in this deal. First, the platform will receive USDT and BUSD in exchange for CONG. The CONG token is the only one in the whole ecosystem and will fund all companies. Based on the TCC roadmap, we will also be able to receive fiat and credit cards soon. Once a company opens a campaign, it will be called CSC, Conglomerate Subsidiary Company. Now pay attention to this. While CONG is not public tradable in a decentralized or centralized exchange, whenever a deal opportunity goes through the platform, the CONG price will be higher. So the earlier you invest and be a part of our ecosystem, the better. After the campaign is funded, TCC will send the raised capital to the company, but not in one shot. We will put the capital in a side pocket account, similar to Scroll account, and will release capital just after milestones are achieved by the company. The CONG holders will approve if the targets were achieved or not. This is an important security measure for the investors. If a company does not perform as agreed, the capital not released in the side pocket account can be used in the next funding deal on the platform, also if the holders agreed. Moreover, seeking the best alignment between parts, the top management of the CSCs will be rewarded in CONG tokens based on milestones achievements and a vesting schedule. So if a company goes well, the management team will earn more money as their token will appreciate in value. That's good for everyone here. Continuing, while the CSCs generate cash either from dividends or from the sale of the company, TCC will exchange this cash to either CONG by a buyback program or to USDT, BUSD, or CONG and distribute to the holders. The holders can also decide to keep this cash in a Scroll account and fund the next deal on the platform. When CONG token trades in exchanges as such PancakeSwap, Uniswap, Binance, and others, investors and CSC top management will also have the opportunity to sell their tokens in the market. That's it. I know that was a lot of information, but don't worry. Everything was built to have a strong and concrete ecosystem. By purchasing CONG, you will have a very diversified conglomerate of companies, reducing risks and maximizing returns of your token portfolio. Nevertheless, should you have any question, don't hesitate to contact us. Thank you for watching. See you later.
Great explanation by Nina there on how TCC works, guys. She explained how their platform works, interacting and aligning all parts within the ecosystem, tied in with investors, entrepreneurs, companies, and the TCC team itself. Next up, guys, we got the Tokenomics by Jack and the Governance by Rosie. Let's check it out.
Hello, friend. That's nice you came all the way to here. My name is Jack from the Conglomerate Capitals team, and will speak about our platform's token CONG. So let's get it started. It is important to remember that the CONG token is the only way to raise capital for the companies that go through our platform. This is a key pillar to align all parts in the ecosystem: investors, entrepreneurs, companies, and TCC team. So whenever investing capital, the investors will receive CONG tokens in exchange. To summarize all tokenomics and utility aspects of the CONG, we could divide into 10 parts as shown in the slide. Limited supply, 10 billion tokens. Token issuances are made just after the approval by governance consensus. Token utility. Holders can benefit from various sources, such as token value appreciation, token dividends, token generation from the sale of a previously funded company, interest-bearing tokens, income profiting token features, so on. Reference program. Every holder can post an application for a new funding deal. After passing through TCC management team scrutiny, it goes for consensus voting. Just after that, a new opportunity goes live in platform. The holder that referenced that deal earns 0.5% of the capital raised in form of CONG. Token tax, 1% split into 50% to holders based on their yield farming stake, 25% to project funding wallet, and 25% to liquidity pool. Seed and pre-sale investors will have 100% discount in year 1 of the platform, 50% in year 2, and 25% in year 3. If they sell a single CONG during this period, benefit is canceled. This enforces the investors to keep the tokens with them. CONG token price is set to increase along with the number of funding opportunities in the platform. The magnitude of the price increase will be set on consensus voting. Therefore, the sooner investors purchase the token, the better. Yield farming, pegged to SELIC, Brazilian Standard Market Rate, currently in September 2022 at 13.75%. Tokens locked for farming, as well as rewards, cannot be sold in the market, but rewards can be used to participate in deals. Seed, pre-sale, and private sale investors have 120%, 110%, and 105% of SELIC for their yield farming tokens, respectively. Vesting schedule, different per funding event, though locked throughout years to reduce sale pressure. Raise fee, 5%, split into 50% to holders based on their yield farming stake, 25% to project funding wallet, and 25% to liquidity pool. CONG options. If the hard cap of a funding event is reached, overreached value is exchanged for CONG options, which will be exchanged for CONG when the next funding campaign event goes online. The exchange price for CONG will be the previous campaign one. Fairness allocation. To increase the number of investors in the ecosystem, new investors will be first group to be prioritized and allocated in the funding campaign. After that, investors have their allocation in terms of their share in the total CONG staked. That's all. Should you have any question either related to tokenomics or any other matter, don't hesitate to contact us. Thanks for your attention and welcome on board.
Hi there, I am Rosie from the Conglomerate Capital team. Thanks for showing interest in our state-of-the-art governance system. TCC and its token zone are governed by a decentralized autonomous organization, DAO. All systems were designed based on the current best practices available in the market plus new cutting-edge features. Shall we start? In the middle of the slide, there are the TCC and zone logo. Our ecosystem environment circulates around them. Both tokenomics and governance are in continuous evolution by our decentralized management structure. In summary, for governance now we have buyback program. Every holder can set to vote if there is cash available as governance procedure. Price and amount of capital to be used will be decided by vote. In order to make it harder to large token holders to manipulate governance proposals given the increased cost of acquiring votes, CONG protocol will use quadratic voting feature per staked tokens. This feature helps us to democratize our ecosystem. Vote lockup. To significantly reduce governance attacks, minted tokens and addresses of less than 1 year are not eligible for voting as well as unvested tokens. Side pocket protection. The raised capital for each funding campaign will be transferred to a scroll account and will be freed based on milestone deliveries. Holders verify milestones achievements to approve the capital release. If milestones are not achieved and the funded company is discontinued, the capital in its scroll account will be locked and allocated to the next raise. This tool is extremely important to protect investors and monitor founder of funded companies to delivery what they promised in the funding campaign. Compensation of funded companies' operational team. Voting consensus approves vesting schedule, quantity, and milestones of CONG rewards to top management of companies to be funded. This aligns entrepreneurs to the ecosystem which benefits holders as a whole. Term sheets. When a venture capital and/or private equity fund provides a proposal to acquire new tokens to be minted that represents at least 5% of circulating supply, this needs to go for voting and the TCC team needs to provide info on the deal to let holders decide. Deals flow in token price. Voting consensus approves if a new funding campaign goes live in the platform and at which price for CONG. This incentivizes to investors buy tokens earlier. Delegated voting. Holders can delegate their voting to someone if they cannot follow the discussions or do not have expertise on the matter. It can be withdrawn at any time. How did you like it so far? We are working hard to get it all done. Together, by a decentralized governed structure, we will change the way people invest their money and companies raise capital. Thank you very much for watching. See you soon.
And lastly, guys, they talk about their token and funding allocation distribution. For more details on that, definitely check it out, what they have here on their webpage in the About section, as well as their competitive analysis, how they're different from its kind. Take a look at some important features that make themselves differentiated within the market against other projects. So guys, it's important to note that they have been featured in a lot of big media news outlets. All of them are listed here on their homepage, like Analytics Insight, the Bitcoin News, Yahoo Finance, all of the above, guys. Fox 28. And just to recap some of the problems that investors face to get into private deals and companies to raise capital. For instance, before starting to work on development of the project, it was required to deeply analyze the crowdfunding and launchpads environments. They needed to understand the complaints and problems from all participants and perspectives, investors, entrepreneurs, companies, and platforms. And to go further in detail here, guys, lack of alignment. Most of investment bankers, advisors, and web funding platforms are just concerned about their fees. There's a lack of alignment between the parts: entrepreneurs, platforms, bankers, advisors, and investors. When it comes to restriction to retail investors, same thing, guys. Assets, private equity, and venture capital funds environment is very restricted, like rich-oriented exclusive leisure clubs. Retail investors are very unlikely to access private market outstanding opportunities. There's really no guarantee or financial performance, guys. The regulatory framework, lack of financial and investing knowledge, there's expensive fees, lack of network, where most of the successful startups were able to initiate and ramp up their businesses just because the founders have connections with rich parts of society. There's also the shareholder concentration, centralized structure, blockchain or market segmentation, no follow-up after funding campaign, the unfairness of allocations. And the solution, of course, guys, is CONG CAP. TCC is a Web3 BEP-20 blockchain-based investment and funding platform governed by a decentralized autonomous organization from which disruptive startups as well as SME businesses will raise capital, guys, where the platform's team, entrepreneurs, and investors have interests completely aligned on by becoming CONG holders. Keep in mind, guys, their pre-sale event is coming up. It's starting on January 16th at 9 a.m. GMT time, guys. That's real soon. The initial supply is 1 billion CONG tokens. Pre-sale event number 2 is starting as soon as number 1 fulfills CONG price at 0.003 plus 20%. And to protect investors against rug pulls, governance attacks for both rounds, CONG token will have a 3-month lockup and 6-month vesting thereafter for a 16.67% release per month. Shout out to all my students. I love you. Shout out to the Crypto Class Gang. Shout out to the Lambo Gang. Shout out to the Well Gang. Shout out to the Huddle Gang. Thank you for always your continued support, guys. I really appreciate it. If you guys enjoyed this video, please be sure to smash that like button for me. Drop a comment in the comment section below. Please remember, guys, we are an impartial channel, so whether your opinion is negative or positive, we'd be more than happy to hear it. That being said, guys, class is now dismissed. We'll see you in our next video. Professor Crypto out.